Hello and welcome at Stocks Advisor channel. Today we will talk about Nuvation Bio Incorporated, traded at New York Stock Exchange, ticker name NUVB. Well, Nuvation is a company that is both with a good market capitalization, which is important for bio companies because we know they can be very sensitive for any FDA related news. And the bigger the market capitalization is, the less usually the impact is of negativity of those news. Positivity is the same, but we are, as we are talking mainly about risk mitigations at our channel, this part is very important for us. And from second point of view, the company is actually, the stock is having a very nice general volatility level, and this level is actually within let's say 12 and 10, and this channel is the area where we can trade, at least for the last half year. You can stably trade with it, and it's 20% range, so you can make here and there many times very nice, let's say, profits. So it's very nice to trade, and we are below that one, so it should be returning there, and all other parameters we will talk about that now. Also saying that the return is nearby to that level. Therefore, we can actually make a well trade here. So if you're a midterm trader, let's say the target is 12 or long term as well. For daily, we will now discuss the levels to buy and to sell. But overall, what we see and what is important here, we are having already a second wave. So the first wave was taking place starting from beginning of February, making really nice and almost 50% range till mid of March. And then we saw actually a decline here, but after that some volatility in the middle, April, May, and then we see again similar decline. And the last 3 trading sessions we see very strong signs of actually deceleration of decline. So it's both actually the combination of the candles you can see here. So let's just let's say show them here. So this is the combination of the candles. Also it's RSI that is quite low already, and it's MACD histogram, which is finishing the secondary wave here, and it's about to pierce up. It might still do, of course, the third negative wave and go a little bit lower, which we will talk about how to mitigate those risks. But overall, everything is loaded, so spring is loaded, and it's ready to rebound, return to this trading channel between 10 and 12, and even going to 12 plus maybe. And if you look higher time scales, you see it's indeed a very strong channel. So to be there, we should return to in order to be there. And so let's talk how to buy through and how to trade. Let's remove this square therefore. So the first level to buy would be, of course, very simple. You just buy within the size of current highs and lows that were traded today. This will be therefore between 9.14 and 9.48. So this is the first primary level to buy through, and this is actually very strong level. So it's a level that should be working immediately, should be taking place or expected to take place as fast as possible once we're there. So we are there already, it means that we can buy. So it's immediate buy level, and we expect as a first, let's say, technical behavior, the primary behavior, to return and at least to go, let's say, at least to the middle, a little bit lower to around 10.50 of this level, which will allow us to make 10 to 15% quick profit. And as I said, if you are midterm, long term, then 12 is your target price. So for short-term traders, the profit taking would be advised from 10 to 15% here. But in a difference to other stocks that we decide, this one is already prepared to rebound. So it's very quick profit taking on 10 to 15%. These are at this first level. Of course, as I said, if MACD goes for the for the third negative wave, which is still possible here, or a little bit extended, this could be happening, but then should be no worries. It just means we go to lower levels, and you see actually the very low level here, which is possible, is just, it's also very close. And this is the beauty of this one, because we are really at the very, very bottom here, and it's just the one formed here by middle of February, also yesterday, and the lowest part would be formed by mid of February by 872. So the second level would be also very close, would be 898 and 872. So we can write it here. This is the secondary one, and generally speaking, it's just you can call it even that there is one broad level from 914 to actually 872, but they are technically speaking clearly different levels. That's why we would like to actually separate them, and if they work, they will also most probably work separately. And this means that we can buy the through non-linearly, and how to buy, how to average down, we will discuss. So these are the most principal levels, technical ones. And of course, the third that we need to take into account is risk mitigation due to negative catalyst. But because here historically we don't have any levels to talk about, we can only take a mathematical approach. As I said, since this is by a company with about 2 billions, so quite high, but we can just take 15% decline of any news if happens, or even a bit higher. And I would say just technically it would be keeping funds on anything below $8 we can buy again as a risk mitigation level. Although not expected at all, it would mean also big loss with market capitalization, and it's just some funds that we would like to keep to buy lower if the price goes lower. And this would mean that we can just write anything that goes lower than 8 we can be buying again. And since there is no real level, we just take it mathematically, the third one. So here being said this, a free level to buy, and how you buy, because they are very close, we still would like to keep it a little bit safe. So it will be 6 portions play, meaning that we start with we split the money we'd like to play here in 6 portions. Then you can buy with 1 portion the first level, so meaning actually at the opening tomorrow, because if you look also after hours, we adjust in these levels. Then if the price declines to the second level, you buy there with 2 more portions, and if we decline anything below 8, you can buy with remaining 3 portions there through averaging down this way your price. And this way of averaging down, which is non-linear, meaning we elevate amount of money we put into this position, means that every time your actual average down or medium price will be very close to the level you are trading in, you are buying in, this way making it the most profitable at the rebounds. But overall, this position is ready to rebound. As I said, most expected mid-long-term level 12, but no one said that we cannot reach again to 15. Everything is possible, but then of course we would need a bit more positive catalyst here. So this is the way to trade. Very nice stock, very quick profiting, already alerting to buy. We are already in the position, so if you like this stock, think of your trade. Of course, you decide on everything. And if you like this way of trading where we mitigate risks due to based on actually 3 levels, 2 technicals, and the third one is risk mitigation due to negative catalyst, which can be coming as a company related news, sector related news, or global news, then don't forget to subscribe to our channel, press the bell button. This way you will not miss our new videos and new interesting discussions for US buy stocks. And by the way, just to let you know, you probably noticed that recently we don't have that many videos uploaded. This is very easily explainable. It's a summer period now. People are on vacations, on holidays, so it's also reflecting on the amount of videos we are uploading. But later, the amount will, of course, resume, and we will be issuing from 3 to 5 videos per day. So with this being said, good luck on this position, and see you at another episodes of Stocks Advisory channel.